So we just got a Bank of England that's seen a pretty sizable reaction in the market with sterling selling off. The read from the market is that this is a dovish hike. In other words, they hiked as expected, the 25 basis points, and we've seen sterling sort of rising quite a bit into this meeting, meaning that the guidance being somewhat dovish on the margin. We had to unwind some of that reaction. And then a little bit more. A couple of developments here seen as a bit more sterling bearish than of course the market was expecting. Dropping that language saying that the market was behind on what the potential for rate hikes might be. That was in a previous statement. That was dropped. As well, we have the bank talking about forecasts based on only 2 more rate hikes over the next 3 years. The market was a little bit beyond that. If we look at the 2-year rate in the UK, it's come off about 4 or 5 basis points from recent highs, even a little bit more than that if you take the actual intraday highs. So this is on the margin sterling bearish. Now on the little bit less bearish side and what could support sterling relatively quickly, not necessarily meaning a rally, but maybe meaning the downside is somewhat constrained. We have a Bank of England saying, and I think this is largely true, the spare capacity is disappearing rather quickly. Their unemployment forecasts are dropping. That's one of the reasons for the spare capacity disappearing. And it wouldn't take much of an impetus of growth to see suddenly larger inflationary forces coming into view and seeing more Bank of England rate hikes than the bank itself was saying and the market is expecting. So this is a net sterling dovish or bearish development. But I'm wondering if the downside is rather limited here, especially versus the euro. We've had a very recent, rather dovish ECB forward guidance has really firmly set the forward guidance there at a very low level for quite some time. And then on the cable side of things, I think there could be a bit more weakness in sterling, but that's a bit more based on the potential and underlying potential because we need to see a few developments for dollar strength. So cable's interesting levels coming up here around or just below 131. There's a 100-day moving average that has been fairly interesting on a few low points in cable recently. So keep an eye on that. But beyond the reaction to the Bank of England meeting itself, we have to remember that it's all about Brexit here. Of course, incoming data is going to be important. It's important what the Bank of England is going to say. But Brexit clarity will bring much more volatility to the market than anything else. So if we see some positive signs that the Brexit talks are moving on to a longer transition deal, moving on to talking about trade versus getting bottling up in all these previous talks about the divorce bill, etc., that could prove a rather potent sterling positive, especially versus the euro. On the other hand, if this just continues to drag, then I think the sterling is just going to be very much caught up in a range and slightly weaker within that range. So again, it's important to see what happened today, to see what happened, to see what the Bank of England is saying. But this Brexit situation really is the overhanging and volatility generating bit for sterling in the coming weeks and months.